I'm Tim Sustak, Chief Treasury Officer with Vizo Financial, and this is your FOMC update for the June 2026 meeting. So, the June meeting was the first with new Chairman Kevin Warsh. There were substantial changes. About the only thing that stayed the same was rates, as the committee maintained the Fed funds target range at 3.5 to 3.75%, and interest on reserve balances was maintained at 3.65%. The statement was a complete format change. It was about the third of the size of what we were used to seeing, and gone was any type of forward guidance. The committee simply said they maintain rates at the current level, reaffirmed the ample reserves regime, gave a three-line summary of economic activity, indicated that inflation remains above the committee's 2% goal with a nod to the constraint in oil supply, and said they would deliver price stability. Talking about the statement in the post-meeting press conference, Chairman Warsh indicated that the goal was a shorter statement that simply presented the facts with no forward guidance. We knew one of Kevin Warsh's goals when he took over as chairman was the change in nature of Fed communication. He believes the Fed has been providing too much commentary to the markets and wants to distill that down to a level he feels more beneficial. The statement was an obvious move in that direction. Further evidence of the desired adjustment in communication came in the form of the Fed's quarterly summary of economic projections, an update of which we received at this meeting. In the post-meeting conference, the chairman revealed he did not provide projections for this SEP. He does not believe it's helpful in the conduct of policy, but he did encourage his peers to continue to provide projections, which they did. June projections show the most drastic changes to the inflation outlook, increasing from the mid-2% range to the mid-3% range, with slight adjustments down to GDP and the unemployment rate. The dot plot showed a Fed funds projection of 3.8% by the end of 2026 versus a March projection of 3.4%. 9 participants predict rate increases by year-end 2026, 8 see rates staying the same, and 1 expects a 25 basis point decrease. We'll talk a bit about Chairman Warsh's first post-meeting press conference after the break. Pain points impacting your credit union's financial growth? It's time to diagnose the problems and find a cure with the TCT suite of services through Vizo Financial and TCT Risk Solutions. Using empirically designed and data-driven tools, this suite can deliver a treatment plan for your credit union's CECL, balance sheet, credit, ALM, and loan portfolio management. Streamline risk management and compliance. Gain actionable portfolio and pricing insights. Drive decisions with data. Integrated, scalable, and built for credit unions, your prescription for precision lies here, and it can help move your credit union from reactive risk to proactive performance. Find your financial strength with a TCT suite through Vizo Financial. Welcome back. The press conference after the meeting gave us some very interesting information about what the Fed under Chairman Warsh will look like, or at least how it will be determined what it will look like. The big news from the chairman's prepared remarks is that he is setting up task forces in 5 areas to look at how the Fed conducts monetary policy. They will be staffed by the best minds inside and outside of the economics profession, and will have the support of subject matter specialists at the Fed. The 5 areas to be looked at are Fed communications, the Fed's balance sheet, use and reliance on existing data sources, productivity and jobs, and inflation frameworks. The chairman said more about the task forces will be communicated in the coming days, and he indicated that there was broad support on the committee for studying how the Fed conducts monetary policy and open minds concerning possible changes to make sure the Fed is as effective as it can be when executing its dual mandate now and into the future. There were a few other things that were clear as Chairman Warsh gave his prepared remarks and answered questions. One is that he and the committee are very committed to delivering on price stability. He mentioned that a number of times, and anyone who thought the chairman was coming in on a rate-cutting mission will have been surprised by the hawkish tone. The chairman also made it clear that forward guidance has been dropped, and whether there is any benefit to forward guidance in the future will be studied by the Communications Task Force. He indicated that he believes the markets work best when they react to data, not when they react to what they think the Fed will do based on the data. When questioned about future press conferences, the chairman said that would also be part of what is looked at by the Communications Task Force, but he did offer that he believed press conferences could be useful, but you want to have them when you have something important to say. Overall, this press conference was an opportunity for the new chairman to give us a glimpse of his views concerning what the Fed may look like during his tenure, including how the Fed will study and possibly change itself in an effort to become more effective in its execution of monetary policy. Well, The worst era of the Fed has begun. All indications are that significant changes are coming to the Fed and the way they conduct monetary policy. Some have already shown themselves, and others will take time to develop. It is clear, though, that the Warsh Fed will likely look very different from the Fed run by its predecessor. That's the FOMC update for June. Thanks for watching, and be well.